So traders, when I am trading, I like to trade from a checklist. And this checklist is very simple. I want to know what I want to see when I open the charts, and every case scenario, I want to know what to do. And I need to know what to do in any scenario. If price breaks structure in the opposite direction, what do I do? If price breaks structure in the correct direction, what do I do? Do I move my stop loss? Do I just hold the trade? These are things that you need to know. So I'm going to go through a few things that you must have on your checklist to make sure you're not confused when you are entering trades, managing trades, and also exiting trades. And also to make your trading as simple as possible. So we're going to start with something very simple. So point number one is overall bias. And this is really important because if price is, breaking to the upside like this, we want to know that price is breaking to the upside. So we're looking for buy positions, long positions. That is what we're going to be looking for. So the first thing you need to kind of point out to yourself and notice on the charts is the structure, is the direction that price is moving. So in this instance here, if my session has opened, I'm looking to trade in this window. As you see here, I have the sessions marked out on my charts. I will be looking, okay, price is now broken the upside in the session I'm looking to trade. Now would be a good sign to look for long positions. And that is the first point. What structure have I seen that's been broken? What gives me a good idea that we are going to go to the upside? What gives me the confirmation that we're going to see further buy positions in this session and not short positions? If price had done this, if we move this box and let's say we've done this. So this is the box we're now trading in, and price hasn't broken this structure here. We haven't got up to it yet, but we then break this structure here. I'm obviously looking for short positions to retest in. However, some people would say they'd see the session open, we'd be bullish, we come up to the high, and they'd be looking, okay, now we're going to break the high. No, you can't go in with a predetermined bias on the setups you're going to take. You have to make it as clear as possible. Is there a breaker structure? So what I would add here to the text is we have the overall bias and we have breaker structure. So is there a breaker structure when I'm looking for my overall bias? That is the most important thing, because if you get that wrong, everything else doesn't matter. It does not matter if your entries are really good or your management's really good. If the overall idea for the trade is wrong, if you can't read the structure, then it doesn't matter what comes next, because you are most likely going to lose. And it will be against your plan, which I don't think you guys actually want to happen to yourself. The next point, news trading. Is there any news? This is super important. I want to emphasize the fact that if you are trading with prop firms, the most stupid reason for you to blow an account would be because you traded news by accident. It's very simple. If you're trading, go onto FX Street, go onto Forex Factory, go onto any site you are using and just look at the news. So I can see here tomorrow, Monday, November 3rd, which is tomorrow. Okay, we have PMI at 3 p.m. Great. Now I know when not to trade, when to not have my trades open. Because if I hold past 3 p.m. and that news release does hit my stop loss or it does hit my take profit, that will potentially blow my funded account. If you lose, you might get crazy slippage, which, as we know, a 1% loss could turn into a 2, 3, 4% loss. Obviously, depends on your stop loss size, but it can make the situation much worse. Even though you have lost a trade, could be 3 or 4 times as bad. But also, it can be bad if that trade does win, because prop firms will either disable your account, meaning you have to pass the challenge again, or they will remove the profits made from that news trade. And this happened to me a few years ago, trading with FTMO. And obviously, it was a good situation because they didn't disable my account, but I was trading on their normal account and not their swing account. And what happened was I traded news unknowingly, again, a stupid mistake, and I think I made around $12,000 on a funded account. And they reduced this profit by around 50%. So I'm pretty sure I was left with around $5,000 or $6,000 after the payout. So again, if I was stupid, I would have continued trading news, but luckily FTMO did move me onto a swing account instead, which meant that I could trade news in the future without the the repercussions basically. But if I had failed a challenge, or worst case scenario, a funded account, just by ignoring news and not taking 5 seconds to check, as you see, it took me a matter of seconds, less than a minute, to check if there is news. So I don't understand why people don't check it before they enter their trades. So that is, again, another really, really good point to what you need to have on your checklist. Is there news or not? That's what you need to know. Next is your entry criteria. This is, again, super important, like everything else on the list. So let's say I'm looking to sell in this area. And we're going to use the replay tool for this. And this was a beautiful setup. I know people in the mentorship even took this trade. But let's say we were selling from this area here. A completely random area, obviously. What I want to know is, obviously, we've seen here, there is structure, and we have broken that structure. So the first one, if we get a little pen, tick. Tick for the break of structure to the downside, which is great. So now we can maybe write B for bearish. Apologies for the handwriting, it's difficult with a mouse. Then we're going to assume there was no news, and we check the news, so we're going to tick that. Now we need to see our entry criteria. And this needs to be in your checklist. Obviously, I don't know your entries. I'm not going to go into detail on my entries in this video. But let's say I'm looking for retesting. Perhaps when price breaks structure, I'll say setting a limit at this point because of this, and with this stop loss and take profit. So your stop loss needs to be figured out, your take profit needs to be figured out, and how you're entering the trade needs to be figured out. If you know that from your back testing you've set limits and prices come up and tagged you in and then dropped, do that in your live trading. Don't go for market executions when you're used to trading with limits. Because let's say if we zoom in here, the price comes up here with lots of momentum, like pushing up, lots of momentum. A lot of people get scared. They don't want to execute on that trade because they see price pushing up with a lot of momentum. And when you are looking on the MetaTrader actual entry platform bit, it can be quite scary. But if that was with a limit, it wouldn't even phase you in the slightest, because the trade is, it's the same as you've been doing every single time. It's been going up and then dropping. But because you're seeing the price moving up and down and your entry numbers going up and down, a lot of people struggle with that. So you don't want to miss out by a pip, 2 pips on an entry just because you were scared to enter. And then when it eventually starts dropping a little bit, then you get into the trade. But by then your entry is basically gone. And if you're losing 2 pips extra per trade, that can add up massively. So then we see what happens. Okay, price pushes up. And if price is pushing up all the way bullish here, obviously you should be tagged in at the line of the entry. But let's say you enter here, you've now lost an extra 2 pips, like I said in the example, which means that if that trade loses and you entered here with the same stop loss, you're now losing an extra 0.2% on this position, just because you didn't follow the entry criteria, which was set a limit. And that is also what you need to remember. Then we also have trade management. So in this example here, we see that price did break to the downside immediately. So there wasn't really any need for any trade management. We see that price then dropped and closed and hit the TP. Very beautiful trade. But this situation could have been different. And I'm going to go over how that could have actually happened. So if we get the pen tool, we can see that we did break to the downside. But what if price went up to this level? So we'll mark out this level, which was the structure. This is the most recent lower high. So this is the structure we are looking at being very important in our trade. So let's disregard all of this price action here. And let's assume price went up and closed above the bodies from this breaker structure. They closed above it at this level. That means I will close the trade. But you need to be very clear in your strategy with your trade management. What constitutes an invalid trade? Is it a breaker structure in the opposite direction? Is it a certain candlestick pattern? You need to be super clear so that when you are in a trade, after you've gone through all the entry procedures, then it comes to management, that you don't wipe it all out with a mismanaged position. You don't want to close a trade early if the trade is still valid. You want to close a trade early if the trade is invalid. No longer valid for your strategy. Get out of the trade. The next trade is just going to be around the corner, so there's no point worrying about it. And that's what you need to remember. And the last point is exits. And this is very important as well, because when you are exiting a position, you need to know why you're exiting. This one was obvious here because we just exited the trade because the TP hit. But many traders, they'll close early because they see price rejecting. So I'll do an example here. if we go back to this level, many people here would struggle. They struggle holding the trade. The reason being, we've come within 2 pips of the take profit. So we know that we had the issue here with the 2 pips. Here, people also have an issue. They see 3 rejections in the zone near their TP. So they don't want to hold the trade. They want to close this early because they don't want the risk of it doing this. And obviously this is a big risk, because if you think about it based on the maths behind it, hoping for the extra 2 pips, you are technically risking a lot more than 2 pips to actually make the 2 pips. So you're risking all of this to make this, technically. However, if you know from data and from everything that your strategy is most profitable just holding to the take profit or stop loss unless the trade is invalid, then just hold to the take profit or stop loss. Because if you start doing it one time and then the trade does reverse, then you'll get in the habit of closing trades early because one time it worked out in your favor when you did close it early. Because if that is the case, when you close a trade 2 or 3 pips early every single time, why not just decrease your take profit size? It's a very simple solution to a problem that can destroy your mental side of your trading, which you do not want. So this is technically the risk reward that you will have in this situation. But again, you don't really want to think about that. And you just want to think about following your rules and following the trade. And obviously we do have another part, which is journaling, but I have covered journaling in other videos, which you can check out on my channel. And if this video did help you, be sure to subscribe to the channel, and I'll catch you guys in the next video.